Well, let's talk about the Fed. The Fed have just cut by 50 basis points, and I gotta tell you guys, I'm shocked. I didn't see this one coming. So today we'll talk about why potentially the Fed have cut by 50 basis points and my thoughts on the market now after that news. Hope you enjoyed the video. Hit the like button. We're near 16,000 subscribers, so if you're new around here, subscribe. Let's get started. So the Fed have cut interest rates for the first time in 4 years, the first time since COVID. Absolutely crazy to think about that, but yeah, they have cut, and they didn't just cut by 25 basis points, they cut by 50 basis points. I read somewhere, don't quote me exactly on this, but it's something like the last time that the Fed did this is when we've been in a recession, and obviously we're not in a recession yet, but it shows you how quite of a big surprising move this is to see the Fed do such a big cut when we don't technically have a recession now. You could say there's a few cracks appearing, but yeah, it's definitely a big surprise. And the market, well, if you look at the market, actually, the market yesterday didn't actually react quite positively to it, and I'll also speak about that and my thoughts on that situation. But I'm shocked. I'm really shocked. I did not see this one coming at all, and it's taken me by surprise. We were on about it on the Discord. Obviously, some of you guys are on the Discord, that you get through the Patreon, and obviously some of you guys on there will know that I had a bet with Sanjay on the Discord. We all love Sanjay on the Discord, and me and him had a bet, and he went 50 basis points. I went 25 basis points, and we put whoever the winner was has a Nando, 3 Nandos on us. And Sanjay, I hope you enjoy your Nandos, mate. I've sent the money across to you, so make sure you send a photo on the Discord of your Nandos, and I'll judge your sauce that you have on your chicken, by the way, so make sure it's a good one. But yeah, I was shocked, but clearly Sanjay wasn't, but yeah, I was shocked. I really did not see this coming, and we'll talk about that today. Apologies if you don't want to hear this, skip 3 minutes further forward and I'll get back to talking about the Fed. But I actually just wanted to quickly talk about yesterday's video. I put a video out yesterday talking about the mindset around investing, and I think a few people really missed the point of yesterday's video. It just kind of got focused on one point around like big YouTubers, which people say like, why do I focus on them so much? And a few people say like I'm negative to a few people, like everyone, and I'm like, I've never really said anything negative about Daniel Prong, Ali's World of Stocks, Sven Kalin. There's quality people out there. The whole point of yesterday's video was to surround yourself with good people that have good mindsets around investing. And if you don't, you'll suffer. All those people that thought there was going to be a stock market crash, after the cut yesterday, is that going to happen? All the people that panic sold 2 weeks ago are probably thinking, what did I panic sell for 2 weeks ago? All those people that panic sold in 2022 are probably thinking, why have I done that? Because the stock market's going to, absolutely fly in today. And that was the whole point around the video. And I thought about doing a full dedicated video to it, but I thought just move on, because the whole point of the channel is around stock picks and looking for the great stock picks and my ideas around stock picks, so I don't really want to focus on it. But there was just so many. I think about 70% of my audience is a quality audience. They're really good. They think about stocks. They try and make their own mind up. But I don't know what it is, but I attract quite a large cohort, like 30% of people that are just clueless. There's no other way to really put it, and they're just unable to make their own decision. And they're probably the reason why you go to McDonald's and you get hot chocolate and they say caution hot on the cup, and you're like, why is that? Well, people get hot chocolate and they burn themselves and they blame other people for it, and that's exactly it. You do look at people, and there's like, I love looking at the mind, how the mind works, and how people process things. And you look at like some of the like biggest leaders in history that ended up being horrible people, horrible people that maybe, started wars on different countries. But at some point, them horrible leaders in other countries that started wars and were responsible for many horrible events around the world, at some point, they had the power to influence other people to think, oh yeah, starting a war is a really good idea, around a good majority of people around them or the population to support it, and they went and did those acts of horror around the world. At some point, people accepted that. Now, you can obviously look back and those go, that was, it's bad that people were following it. But at the time, there was clearly people that thought that was a really good idea. And it's the same, like, why do I call this out? Why do I call this sort of stuff out on the YouTube scene? And it's because these people have influence, and if they're influencing the people to make the wrong decisions, surely you have to use your audience to kind of go, what you're doing, because otherwise the longer they follow those people, then they make the bad mistakes. And that's the whole point around why I've talked about surrounding yourself with the right amount of people. And it's just the comments I saw yesterday, there was some absolute stupid comments, and I had one like saying like, oh, this is coming from a guy that just copies Patient Investor. I didn't even know who this guy was 2 weeks ago until I mentioned him on a YouTube video, and now I'm getting called that my picks are copying him. And I was like, well, even so, let's say I am copying this guy, right? I think from what I can tell, I don't know the guy that well, and I've not watched his videos for long, but I don't think he's from the UK, and if he is from the UK, I apologise. So tell me where his picks are on Hollywood Bowl and Greggs and Supreme. It's absolutely crazy. And the classic comment kind of came out, well, it's coming from a guy that has 5 or 6 bad picks himself. It's like, here we go, the 5 or 6, them 5 or 6 bad picks out of 100 picks comment has kind of come out again. I thought, that is typical. I have not seen that one for a couple of weeks now. I was like, yep, those 5 or 6 bad picks out of 100 stocks, absolutely awful. Maybe I need to get 100% of the stock picks right. Crazy. Anyway, I don't want to focus on that, guys, anyway, because you don't want to waste your time on the 30% that are just, they'll learn, but they'll learn the hard way, unfortunately. That's the way that it goes in the stock market game. But getting on to what we're supposed to be talking about today, which is the Federal Reserve. Federal Reserve cut interest rates, 50 basis points. Shock. I thought it was 25. Credit to Sanjay, who called it on the Discord as well and got the Nando's out of it. But shock. Really did not see that happening. Now, looking at the market obviously yesterday had a bit of a bump up, and then it gave it all back and it actually went negative. I was surprised. What surprised me a little bit more is the Russell. Small caps jump up, and they basically went flat for the day. With the small caps, that's personally what I've been buying a lot more of recently. I think the valuations on them are quite more attractive as well than a lot of the other stocks out there. Lower interest rates for small caps is key, because a lot of the smaller companies need financing. Your big stocks, Google, Meta, they don't need financing. They've already made it. They're already profit machines. Some of the smaller caps, they need financing. Acquisitions, expansions, they finance a lot. If you're financing at higher interest rates, obviously that's not great. If you're doing it at lower interest rates, that's a lot better. And that also stimulates growth around the economy. So with the interest rates getting cut, I thought small caps would do very well. And they aren't. And even the big market cap stocks, actually, they won't do very well. Why was that? I have no idea. Sometimes the stock market does things and you go, why is it doing that? And yesterday was one of those days, like, this is positive, sure, maybe some of it was getting priced in. That may be some of the case, that some of it was already priced in. But there was still quite a chunk of people that thought it was only going to be 25 basis points. So there's got to be some shock out there. Now, saying that, I did go on pre-market to show you guys. So if you look at pre-market, the Nasdaq's up 2%, the S&P's up 1.5%. So today should be a good day in the market, and maybe the market was just doing one of those strange movements. We see it all the time where you go, that doesn't make sense. And the market does that sometimes. It does moves where you go, that doesn't make sense, and it does it. And that's why you can't, all these people going about day trading and stuff. It's like, if someone told you yesterday that you got a 50 basis points cut, you would have been like, thinking the market would, rally on that, and it hasn't. And that's why you can't predict the market in the short term. And that's why it's, so key to go to the long term. Like we said, following on from yesterday's video, long term, obviously I'm covering it today, but the long term ignores all the noise of, is there a cut? Is there a not coming? Is the stock up market up today? It should be up today. No, it's down today. You ignore all that and you get more of the benefits over the long term. On the long term, it'll be okay. But obviously we're going to cover it today because it is interesting and it is fun to see like what is going on out there in right now in the economy. So getting back to the point is obviously the Fed cut 50 basis points, and why is that? Why did they go from 25 points to 50 basis points? And looking at the data that came out yesterday, this is probably why. So there was in the Fed forecast. So the Fed forecasts come out every every other meeting basically. So you get a meeting with a forecast and then they do one about it and then they update the meeting afterwards. And there was a big change here. This is what quite surprised me. So GDP growth, not much change there. Fair enough. Unemployment went up quite a fair amount from the June projections. You see here, 2024 from 4.0 to 4.4. Big increase. If you look at inflation, inflation went down a lot. They went from 2.6 to 2.3. So the Fed are thinking, employment's getting a little bit worse. We're actually further ahead on inflation than what we thought we would be, which to me isn't a surprise. The numbers have been there for a while, so it's not a surprise to see that from my point of view, but we'll let it go. And the big thing is the funds rate. So if you look here, we were expecting 5.1. That's in June. So only like 2 meetings ago, we got 5.1. And even if you go to the data, the meeting 1 month ago, I should have probably preloaded it. Even then, we weren't expecting this amount of cuts. And what was this more surprising is 2025, 4.1 down to 3.4. So the Fed haven't only gone from where they were 1 meeting ago, a month ago, 2 months ago, from saying, we actually don't, we did say we were going to do 3 cuts, and now we're thinking maybe even 1 cut, maybe no cuts. And then all of a sudden they've jumped back to, 50 basis points, and then we might even do 1 more cut this year. And then by 2025, we might go do another 4 cuts. It's such a big turnaround, guys. This is the big thing. I was shocked reading these numbers. And I'm surprised the market isn't rallying. Well, it probably will do today, because it's not only the 50 basis points cut that was a surprise yesterday, it was all the numbers, like, for the cuts going forward. And if you look at the Fed members, a lot of them have gone from, they've changed rapidly from where they were, 2 months ago to where they are at right now. And why has that happened? Why have we gone from, we might only have 1 cut, to 50 basis points cut, we might have another cut yet, and potentially another 4 cuts next year? Why has that happened? Well, I think, as you can see on the data that's here, I think the Fed have kind of realised. I think they've realised inflation isn't that bad anymore. I think they've realised the economies get a lot weaker. I think after the last update they did, and then the job data came out, which was horrible, and then I think they've sat in Q2 earnings and they've gone, actually, it's getting quite bad out there. I think they've actually, and I can't find of a better word to explain it, but I would say the S word, but they have pooed themselves is the way that I would go and describe it. I think they did the meeting last time a month ago, and they were saying, we don't know if we'll do any cuts. Some really bad data has come out. They've realised how inflation is going, and they're actually doing quite well against it. How the cracks are actually showing in the economy, and I think they've gone, we probably should have cut last time, and then they've tried to make it up on this one. I've been on here for a while thinking, I've been saying that they should have cut a while ago, and they haven't, and I think they have started to see the cracks show, and now I think they're trying to make up for it and be more aggressive with the cuts, because it's surprising, the Fed, who have been relatively cautious, going up and up and up and up, and left it for so long, to now suddenly go straight in with a 50 basis points cut instead of a 25 cut. That screams to me that they've got a little bit nervous. I think they've seen the data, that they stayed the same when they should have cut last time. They saw the data and they went, we've panicked. We should have done it. We should have cut, and then they've panicked. I personally think that's what's happened, and I think that's what the data is here. Now, don't get me wrong. Looking at this here, looking at these Fed forecasts, if they are going to do these cuts that they are saying they're going to do this year and next year, I got to say, guys, I think that if they can get to 2025 and the federal fund rates is at 3%, I think that's really good. And from where I were like a few months ago, where I was getting a little bit nervous, this has actually made me calm down a little bit, where I think this is actually, if I was on the Fed, this is actually what roughly my projections would be. And I'm actually quite happy with these. It makes me feel more confidence that, there is a lot of weakness out there, but the interest rates are coming, and they have started. And if they do follow through with the cuts they're suggesting here, we might be all right here, guys. We'll see what happens. But I thought this was really good news yesterday. So we'll see what happens with the stocks going forward. I think, obviously, the big thing is the S&P is still at a rich valuation, but I think this does take some of the pressure off. I would expect some of the small caps now, some of the money to start rotating into small caps. That's where I think the valuations and the opportunities are at. We'll see what happens. I got to say, I'll say this here, there's a little rumour going around in the background that the reason why the Fed have started to suddenly be so aggressive on the cuts is because Jerome Powell doesn't want Trump to get back in power, because we know last time Trump gave Jerome Powell and the Fed a hard time. So there's rumours that potentially there's a little bit of a election coming up in November. Let's just support it a little bit and put it in one direction. But I'm not saying that, guys. I'm not saying that. I'm not that sort of person, but that's what a few people are saying. But yeah, overall it's good. It makes me a lot more confident now for where the stock market is, where the stock market will be in 2025. Obviously, these cuts that are coming now, they'll take a few months to get into the system, but it looks good. I think the big thing that we have left now this year is obviously the election. There could be a few surprises there, especially if certain people lose the election. That could potentially throw a few spanners in the work. We'll see what happens. But yeah, that's videos today, guys. Surprised, but happy. happy. I'm a bit more confident looking at these forecasts and projections that they've put out. I can't believe how much they've changed from a month ago and 2 months ago. I generally think the Fed have pooed themselves over some of the economic data, and that's what's forced them into this big change. But I am a little bit happy where things may be heading to for the rest of the year, and we'll see what happens. Hope you enjoyed the video, guys. See you in a bit.